Hello, everyone. Welcome back to the channel. In this video, we're going to be going over a very important thing that you should all be very aware of if you want to improve your overall trading and improve your overall win rate. Okay. And this is going to be figuring out the overall trend for whatever market you're going to be trading. This is very important in your trading. You don't want to trade against the trend. You want to trade with the overall trend. So after you do your technical analysis, which I'm going to show you here once I pull up my charts. This is the weekend now, and this is where I do all my research. I look at all three major markets and I map out the overall trend starting at a higher, longer time frame and then moving to the shorter time frames. This is the way that you guys should also be doing it. Once you establish your trend, which is the way that the market's going, either uptrend, downtrend, or just a market that is sideways, okay? You have to establish this first before you take your positions. If you do this the way that I'm about to show you, you're going to notice your success rate in your trading is going to skyrocket. All right. So before I get started, guys, if you would please hit the thumbs up for me. This is a lot of work and a lot of preparation into making these videos. It helps out a lot if you hit that thumbs up. And if you're new, subscribe. There's new videos every single day, and you can check out all my old videos that I made, and you can see what we offer here with day trading. So here we go. This is, I use Thinkorswim by TD Ameritrade. I find that their charting is really good. So just going to move myself over there. Okay, let's start with the Dow Jones. Okay, this is the Dow Jones Industrial Average. This has a lot of stocks in it that aren't, it's not just like tech stocks, for example. This is all your industrials. The SPX, this one is your S&P 500. The comp, C-O-M-P, these are the ticker symbols for it, is your NASDAQ, okay? So let's go back to the Dow. These are the three main ones. There's also the Russell for all the small caps, which have been on fire. But let's just look at these, okay? We're gonna start with the Dow, and we're gonna look at it from the day. So this is the daily, which is the 1 day. Each one of these candles is one trading day, okay? And this is for, let's look at year 2020 to where we currently are in 2021, okay? How did I get these trend lines? If you pull back, starting in 2018, I drew a trend line from the top here. It hit the top here, and then we hit the top basically here. So what that would suggest, right? If you were going to try to predict the future, is that once we make new highs, if we hit this top long-term trend, that we might correct or we might pull back. These don't always have to happen, but based on previous tops with this long-term trend, right? It would suggest that we are entering that spot here where we may eventually hit and then come back a little bit. You know, that doesn't mean it has to happen, but it is what it is. Now, we're trying to figure out the overall trend. The overall trend for the Dow is obviously uptrending, right? If you look here, 2 weeks ago, we had a pullback and then we rebounded really, really nicely. This was about a 5-6% pullback, and it happened so quickly, and it reversed course. Okay. So the Dow is looking very nicely for a continued uptrend. But once again, you got to realize we're coming into these top trend lines here. Now, what I also noticed, and I put on my charts here, is the RSI. Okay. This is the relative strength index. I put this purple line in here at about, I'm trying to get the exact, about 55 or 56 on the RSI. I've noticed we've hit that on each pullback and we have rebounded. The only time that we didn't hit it and rebound, it tried to, is right here where we had a more aggressive pullback. So you're going to want to watch these levels coming up. If you dip below 55, 56 area, just be careful. There may be more of a pullback. But overall, right here, right now, I would just, keep in mind there is maybe a limit here on how high we can go. So we are extended, okay, on the Dow Jones. Now let's go over to the S&P 500. Now this one also, now this is the 50-day moving average. This is the 200. We're well above the 200 on basically everything you can be trading right now because we're in a super bull market. The last time, like you saw on the Dow 2 weeks ago, we pulled back to the 50-day moving average on the S&P and we bounced right back. When we bounced off, right here is the 20 EMA that I put on my daily chart. We bounced off the 20 each time, except for this one time. Bounced off it here. We came very close here to bouncing off of it. On those days that we bounced off the 20 EMA, I also noticed we were hitting about 56 on the RSI. Okay, we bounced each time off of the 56. You guys are going to want to monitor, again, the 56 on the RSI. You're going to want to see a bounce. If you break below it, there's a chance for a bigger pullback and possibly an even bigger correction, which is what happened back here in October. We saw a bigger correction. It was about 20%, which is what everybody is expecting to happen. I don't know when it will happen, but there probably will be a bigger correction. So you're going to want to watch this 56 level on the RSI. If it doesn't bounce off the 20-day, right, and it goes through it, just monitor this level. It did break through it here, but it rebounded really quickly because there is a lot of people that are saying to themselves, I'm going to buy every dip in this market. There is a ton of retail investors and there's a ton of money and stimulus with the Fed helping that these dips are getting bought up. But just keep it in mind, right, that if you break these levels, you could be looking at a big correction of 10, 15%. You just want to, be aware. Every time we make new highs, it seems like we like to pull back to this 20 EMA. So just, keep that in mind. And now we go over to COMP, which is the NASDAQ. This one also bounces off of the 20 pretty nicely, right? It seems to respect that. It bounced off really to the dollar here, this was Thursday, okay? That is nice to see that bounce off of it. I also marked up some levels here for you on the RSI. It looks like the RSI on the NASDAQ is 60 is the line in the sand. when it comes to the 20 EMA. When it breaks under that, it looks like we were hitting on the longer term 51. These are things you're going to want to put on your charts. RSI. You want to put 200-day. You want to put the 50-day. These are SMA. And then you want to put the 20 EMA on the daily, okay? Once you look at this from a longer time frame, which is the daily, you're going to want to come in here. This is the NASDAQ we're doing. And you're going to want to start to dial down to a 10-day, okay? You start at a longer time frame, and then you want to see what it's doing right now, right? So on the 10-day, it looks like we were consolidating. We hit a high, and then we started making lower highs and lower lows, right? What happened here on Friday, we made a higher high than the day before. See right here? We also made a higher high than the day before that, which is a good sign. And we made a lower low, a higher low than the day before. Could this be maybe a nice rebound? The start of it anyway. We have to wait until Monday and Tuesday to find out, but maybe we'll rebound and make new highs. These are things that you have to be aware of. This is now the 10-day. Let's look at the Dow. The Dow 10-day. What does this look like to you guys? This looks much different than the tech stocks, right? This is the Dow Industrial. This is in a very specific trading range, which is a sideways trading range for the last 10 days. So you have your high here, you have your low here. It's just consolidating between those two levels. And as you can see here, we almost hit that long-term trend on the high end. Also, just monitor this trading range. This is called the sideways trading range, consolidation between these two levels, 31,647, and then on the lower end, about 31,240. On the S&P, this is more like the NASDAQ because the S&P has a lot of tech stocks in it. So what's going to happen with the S&P is most likely going to happen with the NASDAQ. You guys got to keep that in mind. There's a lot of tech stocks in the S&P. Same thing. We started to make lower lows, right, in the last few days. And then we came up here and we made a higher low for the first time. So this could be maybe a little rebound. We'll have to see. So to sum this all up, you'll want to trade and make your trades with the overall trend of the market. And you always start by doing the daily, which is the 1 day. And you want to just map that out and see where are we? Are we overextended on the RSI at the moment? Would I want to buy long if we're overextended on the RSI? The answer is no. You wouldn't want to do that because you would be buying at a high. So most of the times when you buy, you're going to want to buy on a pullback, right? And then you want to see that level actually hold, and then you can buy and then you make new highs as you go. Just things to keep in mind when you're trading is start with long term, right? And then start to go to like your, you can do 180 day and then you go down to 10 and then 5. And then you get to, when you're day trading, your intraday, which is your 1 day, 1 minute charts, or 5 minute or 15 minute. And you want to take your overall trends of the market into account when you're trading. So once you find your trend, you can trade with a lot more confidence. Would you want to buy something if the overall trend of the market is currently going down? Probably not. You want to trade with the market. You have a greater level of success that way. And when the overall trend is going up, you go into that intraday, right? So now you're looking at very small time frame. You want to wait for a nice pullback, buy then, and then you'll ride the stock up on a day trade, as long as the overall trend is going up. Now, you can, in a downtrend, right, you can still profit. There's a lot of ETFs that you can do to profit off of that. One of them is SQQQ. This will actually go up. This will go up when the overall NASDAQ goes down. Okay, it's just an inverse as far as that goes. Now, if you guys look at it, obviously you would not have wanted to buy this. Look at that, 427, all the way down to a low of 1175. So you would not have wanted to buy a short on the NASDAQ. But as things change, right, if you get a correction and the NASDAQ starts going this way, this will start going this way, which is what happened back in March. So there are some things that you can trade. Now, I think I have one for the, let me see here, SPG, SPX, SDS. This is one which is an inverse for the S&P 500. This will go up when the S&P 500 goes down. So these are some inverse plays that you can do. Now, if you were going to trade futures, you can always, these are the futures ticker symbols right here. This is one where you can sell a position short and then buy it back when it goes down. These are other ways you can profit on a downtrending market. This is uptrending. So I would not want to do that when the overall market is trending up. So anyway, I hope that the video wasn't too long, but I do think that this is super important to understand in your own trading, is to figure out the overall trend of the market, start at a long term, go to a short term time frame, and then you can dial in your entries and trade with the overall trend of the market. I find that that is way easier than trading against the market. So keep those things in mind as you trade, and you'll find your success gets much, much better. So I hope you guys enjoyed the video. Enjoy the rest of your weekend, and I'll see you back on the next video. Take care.